The mic, I guess.
It's right in front of you. It's hidden.
It's hidden. Oh, okay. Thank you. Yeah, I don't have any technology today. I tried something new. My computer was stolen a week ago, so there's no slides, nothing. Very interesting. But anyway, my task is to introduce Islamic law, especially the Islamic law of commerce and investment, give you some idea, and also the Islamic finance industry, again, give you an overview. But I want to try to reserve enough time at the end to say some words about how I see Islamic finance industry as really like an adolescent, having survived the dangers of childhood and now increasing in its awareness, self-awareness, and its powers, asking who it is and what is it going to be when it grows up. And more specifically, right now, the question really is, and I'm going to try to draw you into just not the sort of celebratory parts of Islamic finance, but some of its internal debate, which is very vigorous at the moment. The internal question right now is, how far should it continue to align with conventional banking? Because as you've already heard, if you're interested in doing Islamic finance in the Gulf, you'll find that you can do practically anything that you could do with conventional finance with a few tweaks. There's some added transaction costs. So don't feel afraid of Islamic finance. You will find it quite familiar. But that's really the question. Should Islamic finance be so similar to conventional banking? It could grow closer and closer. I'll try to describe that. Should it instead pull back and be truer to the ethical claims of Islamic law and also to loyalty to sort of the larger socioeconomic vision of Islam? Those were the original inspirations, as I'll say, for Islamic finance. And Islamic finance has still, in its self-awareness, not come to terms with that origin and what it has become. It's wondering, isn't there more? And that's what I'll try to draw you into today. When I do speak about those issues, though, I will focus on one of the stakeholders of Islamic finance, only the Islamic legal scholars of Islamic finance, those who are active in the field. But I'll give you a glimpse of my focus will be on Islamic law, Sharia. By the way, I'm not a practitioner. I'm more of a theoretician, more of a lawyer, and Islamic legal scholar, so study of a student of Islamic law. So then to give you an introduction into Islamic law, well, first, Islamic finance, to emphasize, can be defined as the conduct of financial transactions legalistically in compliance with the rulings of the traditional Islamic law of contract, commerce, property, as received from past centuries, books written hundreds of years ago. So to talk briefly about what is that traditional Islamic law. As all of you know, Islamic law, Sharia, claims to be derived from, by process of learned interpretation, from the Quran and from the written record of the Prophet's sayings and doings, called the Sunnah. Both, in effect, revealed texts dating from the 7th century. If we focus on contract and commerce, there are three major themes in that revelation that I'd like to point to. First, they lay down a very strong foundation for a practical and flexible, as well as ethical, law of contract and property. And they celebrate trade and commerce as a means of livelihood. The Prophet himself was a trader and left a long and detailed record of his views on transactions. Medieval scholars also reached the principle that in matters of commerce, unlike more sensitive matters like worship or family relations, everything is allowed unless it is specifically prohibited by revelation. So it's basic permissive attitude. So this is sort of the first theme. The second theme from the revelation is, however, to enunciate rather broad, general, and relatively vague restrictions on what is allowed in commerce. Basically a wide open door, but there are these two problems. The first of these, and the second theme of the revelation, is this well-known prohibition on riba, meaning usury. Quran vehemently prohibits it. Whatever it is, Muslims must avoid it. And until today, uniformly throughout the centuries, and until today, the majority of authoritative scholars of Islamic law interpret riba as including interest of any form, actually compensation of any form on lending of money. But equally important for Islamic law is something not talked about as much, which is the Quranic prohibition on maisir or gambling, and the accompanying prophetic prohibition on the sale of gharar, meaning risk or uncertainty. That's the sort of third theme of the revelation. So the problem for Islamic law is how to reconcile this basic approval of credit and commerce, very differing from the Christian tradition, for example, with these two relatively general prohibitions. The Quran states the dilemma very clearly. It says, those who swallow down riba say, trade is just like riba. Sale is just like riba. You might say lease is just like riba. It's a leasing of the use of money. But God has declared sale licit and riba illicit. So you left, what is the difference? And scholars have worked for centuries on this. For example, they reached the conclusion that while it's not permissible to lend money for compensation, one may sell goods on time for a higher price than spot. In other words, the time value of money is recognized in the context of sale but not lending. So within less than 2 centuries after the Prophet, the medieval scholars, drawing heavily on existing practice for raw material, had created a highly successful, practical, and for its time, extremely sophisticated contract and commercial law. But that law is fundamentally inspired and, in fact, integrated around the exploration of these two prohibitions of riba and gharab. They're fundamental to the law. Now, it's worth noting that although the revealed texts, the Quran and the Sunnah, are pervaded with concern for ethics in commerce and lending and so forth, investment, this law, like any other law meant for practical application, it was applied for 1,000 years very successfully, is focused on what is permissible, what is valid or invalid, what is obligatory or prohibited, not necessarily on what is the better practice. It focuses, for example, on external facts rather than on inner secret intent. So it tries to balance those, but like any law that's meant for application, it sort of has to take an external viewpoint, practical viewpoint. Now, to say something about Islamic finance. It's a modern phenomenon arising in about the 1950s, when dedicated Muslims set themselves to ask what should be the Islamic response to the phenomenon of banking and finance. And they did so against the backdrop of a perceived struggle between communism and capitalism, the two ways. So some thinkers went with one of those two ways. There was an Islamic socialism movement, and then there was a movement of those who said interest is not riba, everything in finance is fine, everything in commercial law is fine. But other thinkers took a different course and took seriously the tradition of Islamic law and sought within it a principle that would give them a so-called third way. And they found this not only in the prohibition of interest, but in mostly in this one particular partnership form called mudaraba. This is a partnership where one party provides only capital and the other provides only labor or management of that capital. And Islamic law lays down that if there is net profit, the parties share them by pre-agreed percentages. But if there are losses, they fall entirely on the capital owner. This is seen as balancing the interests of capital and labor. From this legal institution, they developed a whole theory of investment and finance as well as economy. They also used mudaraba as the model for creating Islamic banks. The depositors are to be the capital owners, susceptible of loss, and the bank to be the manager, sharing the profits by percentages. And then when the bank turns around and invests on the asset side, it will invest in its customers in the form of mudaraba also, two-tier mudaraba, and reap only percentage gains. So the inventors of this system, eventually called the Islamic economists, argued for the potential virtues of an economy, a hypothetical economy based on such a notion, and on the prohibition of interest, and also on other institutions of Islamic law such as the zakat, or the charitable tax, that is meant to shift wealth from the rich to the poor. So now the Islamic finance industry, as it developed, was launched originally with actually the very first banks were launched with a strong social purpose, for example, to encourage banking at the community level, slightly socialistic. But by the 1970s, with new petrodollar wealth,